Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is November 6th, Friday, 2020. And because I still have some holdings that are reporting earnings for this quarter, this video is talking about STAG Industrial. They are a monthly dividend paying real estate investment trust that I own in my Robinhood portfolio. So that's the video that we're going to have for you today. But as you can see, with the stock market closed, it is now almost 8:30 p.m. here in Hawaii Standard Time. My Robinhood portfolio is looking good. I do have two other main portfolios that I use. Robinhood is mainly for growth, but I do have a few dividend-paying companies in this portfolio, STAG Industrial being one of them. So up 16%. I think this is the best that this portfolio has ever done, but I do see a little bit of a trend as far as what has happened at the beginning of September and what has happened at the beginning of October for this year. Both months started out really high, trading really high at the US stock market, and then all of a sudden mid-month to the end of the month the stock market dipped. So my thinking is that possibly could happen for the month of November as well. The election still hasn't been decided. There's probably going to be recounts that could last another, I don't know, week or two, somewhere around there. So I'm waiting. I'm waiting to see what else I might want to add to. I did add to Electronic Arts this week. I also added to Fastly, I believe, in my Robinhood portfolio here. Excuse me. And I did add my weekly contribution to my M1 Finance Roth IRA account. So M1 Finance has my Roth IRA. Robinhood really is just for growth, capital gains. That's the majority of my holdings here. So that's probably why this one is now, I mean, this is a record, 16.5% gains for me. This is the most that I've ever been up with this portfolio. My Roth IRA has often been over 20%, with the exception of the end of last month and the end of September. So, and now my Roth IRA is up over, or I think it's just barely over 20% right now as far as gains are concerned. So, if we go to the 3-month lookout here, you can see 12% as of November 5th, and then 13%. So it's really just the all-time, well, the past year I'm up 34%. I really don't look at the past year that much. So closing in on 3,000 as well too, which is a surprise. Just because the way the stock market has been, you don't know how long it's going to stay up and how long it's going to stay down. But I think there might be a little bit of a trend now, seeing how we've seen the stock market go high at the beginning of the last 2 months, and it's done the same thing here for November. So probably going to wait to add to anything unless something makes a severe drop, with the exception of my Roth IRA. I just automatically put $100 into that every single week. So for the day with Robinhood, the after hours and at the end of the U.S. trading day ended in the green as well too. So this is pretty exciting for me. But let's talk about STAG and their earnings report for the third quarter of 2020. The stock after hours stayed flat, dropped down a little bit here. This stock is trading very high, 43 times its earnings. So you see here PE ratio 43.9. So it's trading really high. But I like them for three main reasons. One, they specialize as a real estate investment trust. They specialize in warehouse and distribution centers, which is huge right now with e-commerce, Amazon, Walmart, Target, all these companies shipping online. So they need distribution centers and they need warehouses to hold these places. So STAG Industrial, single tenant, and rents out the space, leases out the buildings to these various companies that need to ship things around the country or around the world. So the second reason why I like this is it does pay every single month. So I no longer have ticker symbol LTC, Long-Term Care, which is another monthly dividend paying company. The only other monthly dividend paying company that I own is Realty Income. That is in my Roth IRA with all the rest of my real estate investment trust. And then the third reason why I like this company is this nice dividend yield. And this is sustainable because if you didn't know, real estate investment trust, for certain tax benefits, if they pay the majority of their profits back to their shareholders, then they get a nice little tax break there. So I believe this 4% dividend yield will hold. Probably, I don't know, the stock hasn't traded really high. It's almost to its 52-week high right now at $34. I don't know how much further it can go past that $34. It's pretty much stayed in the 30, 31 range for the last 6-7 months. Or not the last 6-7 months, because I bought in at, what did I buy in at? I bought in at $24.92, the 3 shares that I have, and I just haven't added to it because once I got to this $24.92, it started moving towards 30 really, really quick. So my total return is 27%. So I'm just kind of holding right now. But I do believe this dividend yield is sustainable, and we're going to look at some of those numbers here in just a moment. They pay their monthly dividend on the 16th. So you see here mine is coming up on the 16th of this month, 37 cents for the 3 shares that I own. So those are the 3 reasons why I like this company, why I decided to get into them, and I just happened to be able to get into them at a really low price. I got into STAG at a low price, I got into NEO at a low price, Starbucks and Sony all at really, really low prices. So I will probably add to STAG if it drops below $30 again, but right now they're not kind of a priority for me. So, but their third quarter earnings highlights here. This I got from PR Newswire is the website that I got this article from. So this first paragraph here is talking about their net income diluted common share. That's not really the best way to evaluate real estate investment trust REITs. Real estate investment trust, you get a better idea of how the company is based off of their funds from operation, their FFO. So we'll kind of skip that one right there. I mean, they did bring in $22.4 million in net income, but we'll just go here to the funds from operation. They pretty much stayed flat at 46 cents per share. That is diluted. That is equal to the third quarter of last year, 2019. Same thing is what they brought in. So generated core FFO, funds from operation, of $70.7 million for the third quarter of 2020, and compared to the third quarter of 2019, that is an increase of 16%, because that quarter they only brought in $60.6 million. So good revenue turnaround for them, which I would kind of expect to see, seeing how e-commerce is huge nowadays, especially with the stay-at-home economy. Pretty much everybody's ordering online, and the holidays are coming up as well too, so they should have a really good fourth quarter as well. And then just to scroll down past some of these other things really, really quick here, just to highlight one other thing. Their produced cash NOI, which is net operating income, $95.2 million for the third quarter. That's an increase of 15%, over 15%. Third quarter of last year, $82.5 million. So really good numbers all the way around for this. If you kept scrolling through and reading the rest of this article, for the sake of time, I'm not going to go through the rest of it. Those are just a couple things that I wanted to highlight. Oh, and the last thing I wanted to mention too, which is a big deal for real estate investment trusts, is their occupancy rate. So their occupancy rate is well over 95% at 96.3%, and that's on a total portfolio, 96.9 on operating portfolio. So they've been able to maintain and retain their tenants, which is important. If you know about if you lease a building or a vacation rental or something like that, you want somebody in there to help cover the cost. So this is a really, really good REIT. It's just that their PE ratio is just really high. That's really kind of the only bad thing about them, is that their PE ratio is really, really high. So later on in this article, it talks about what to expect for the next quarter, which basically just highlights and says that they expect really good things for the next quarter. The CEO talks about that to see what happens for the fourth quarter in 2021. And my personal opinion, if you wanted more on the cheaper side, monthly dividend real estate investment trusts, with a huge upside. My personal opinion, look at STAG, because they are going to pay you every single month. It's not a huge dividend. The dividend yield is bigger than what the actual payout is, but this could be very future proof for you. That's kind of how I see it. I kind of see it more as future proof for myself, because shipping, warehouses, distribution centers, all that type of businesses is pretty much the future. So have a great weekend, everybody. See you in the next video. Mahalo and aloha.